What's going on, guys? Welcome back to another video. Uh, Kick it off with another weekly analysis of SPY and QQQ. So starting off with SPY, pretty good recovery after FOMC, right? So large red day at the 740 rejection, recovered. Looks like a beautiful inverse head and shoulder here, right? Trapped everybody short here. The 736.12, 736.12 left and right shoulder. And we break this neckline here to close above, so that looks pretty good. We're above the 5-day. We close right at that 20 and 50-day area, so those would be important to watch, especially because our 20-day hasn't been support. We've been trading under it, so do the bulls have now enough strength to get above that? Of course, a lot of earnings this week, the war, those kinds of things are going to affect, but right now it does look pretty good. In terms of the recovery after FOMC. On a shorter time frame, as you can see, the 736.12 level right around here, and where these lows are, right? So we broke under and we just could not maintain down there. So the inverse head here, left and right shoulder, that kind of brought us up and out. So next, I think importantly is right here at this 42-43 zone where we had some prior support. Then in this area, I saw resistance. We got through it. Now, when the market comes and trades into this area, do we hold? And what would be even nicer is if our 5-day trends up and we start holding this 42-43 to head higher. Would be important, right? So our zone of resistance that we're going to be watching is going to be this 748, 747. As you can see back here, 747, some resistance, as well as over here, and then 748 support on this back end over here. So that zone, that's where we came into on Friday, and then kind of got this red candle. So let's see how we open. And we'll kind of reassess from there. If we're trading back here and we turn this 20-day into resistance, well, we might be looking lower then. So I don't think there's any long-term shorts until we really come back down here and this 736 support here is be turned into resistance, and then we might have some more major downside. But other than that, we've been range bound. 750 at this top end, very important level. So we'll be watching that 740s where our Friday support is. That's very important as well. So let's see, if we're going to have any more upside, we got to get 750 turned into support to head up to test our highs at that 760. And for the downside, this 736 level turns resistance. It'll be a good move down. If we're looking at Friday's trading session, what looks like a major sell-off here to start the day came right to the 5 days. The 5 days was down here at that time. We got this nice little recovery. As you can see, this is almost a cup and handle formation that formed right in that time. That helped with this recovery. What the heck? So we got this cup and a beautiful handle here, exactly to 740 to the T breakout, and then you got that microstructure here with this inverse head and shoulder that led us on the way up and out into that 748 level. What was interesting is, this day was early on started to put heavy, but even through here seemed like the whole day was just put heavy. But again, it was end of month expiry. People were loading up puts and they just kept grinding it up and letting those expire worthless. So it was interesting to see the gamma data and the options order flow there. But really good. Again, 740s are a good level. The other thing that would make a case for that 743, 742 is, this cup and handle neckline is there. So can we maintain support there if we're wanting to go higher? So that's important there. Let's look over at the Qs now. So the Qs, we were trading way at this Bollinger Band for many days here. After FOMC, we're back in it. We're back above our 5-day. 680 was a very important level. That's exactly where we dumped for the FOMC day, was off of 680 down, and now we are above it, right? So Friday came right to 680, and then we got some buying from there. So it'll be an important level for the Qs to hold. going forward. I still think 687, especially from these supports back here on this daily. There's three major supports that have kind of kept us up in the past above 687. We've obviously traded below it. Now we're back above it. So can we hold 687? I think that's going to be interesting. Maybe even some microstructure where we come back down in here and then reclaim 687 to head towards the upside. 696 is very important as well. And, that psychological 700 where this 20 day is going to meet us if we're going up. But again, this comparing to SPY looks a lot weaker. So that's going to be something to pay attention to. I mean, AMD's got earnings this week. If any of these companies are missing, we might have some real aggressive downside. And if that's the case, this 680 rejection, I'm looking for more downside. But we'll see when that comes. As far as the shorter time frames go, again, the 680 level, right? So here was your FOMC rejection down. We reclaimed, we've maintained here. So we'd like to see that remain a support at this time. We have a gap close all the way up until about 705 that we may want to fill. But again, our 20-day will be resistance before that. So let's see if we can get support on that if we're really looking for upside back up to this 710 resistance for the QQQ. So again, definitely looks weaker. We did not test our high a day or go above it, unlike SPY for Friday. So that is definitely showing us there's some weakness in the tech sector at this moment. So if we look at the 1 minute, pretty nasty sell off in the morning, 680 recovery, sort of a similar structure to SPY, but not quite a cup and handle. But if you use the charts and correlation, you can definitely see how they helped out, kind of rallied up into 690 and then just chopped around there and back below 687. So we'll see where we open up in the morning. But again, I'll be watching 687. There's good liquidity here at this 688, 690 area. So if we reclaim, do we, grab that liquidity on the way up? So that'll be important to watch. And then just on a kind of a larger time frame, we'll look at the tech sector, the SMH. I mean, again, 20 below the 50-day moving average bearish. We have this red day. We're back at 540. 540 is going to be important to maintain a support, or do we fall back under, reject, and then we're heading back lower? So we're finally above the 5-day. Can we maintain that support? Maybe test our 20-day moving average, or are we going to get more selling? But again, some of these major tech earnings are really going to make a difference for us as far as that goes. So, this one moves more violently. So it's going to be important just to, not be gambling, okay? Not be buying into earnings unless your risk is really defined, because you can definitely get burnt, especially on individual tickers. So just be careful with that. On the 1 minute, for sure, this 746, 546, 547 zone, I'm definitely watching as zone of resistance. You can see on Friday multiple times it maintained resistance there. So we got to get above that for some good upside, because you can see this is just straight down. So if we turn this into support, this is weak structure for the downside. So it's going to be easy way back up towards those 560 levels. But for now, definitely watching 547, 546 as that resistance that it was all day on Friday. As you can see, it's just a, kind of a beautiful bear flag that formed here. So do we get more downside breaking under 540, or are we going to start reclaiming back up in here and getting some support? So just be cautious, guys. It's still volatile. We've been range bound. So anything could change that for us. That could be the war, could be this week's earnings. But remember, we're range bound. Just be careful. Larger moves. We talked about the larger levels that we're waiting for breaks or reclaims of. So again, trade less, execute better, make sure your risk is well defined, and I'll see you guys in the next one. Thank you.